Good morning, and welcome to episode 211 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, February 12th, 2025. The delicate ceasefire in Gaza hinges on the release of hostages scheduled for this Saturday. Let's hope cooler heads prevail and the ceasefire persists. Meanwhile, here in the U.S., the first 100 days and the chaos created by President Trump's first 100 days of actions continues here in the U.S. Cabinet confirmations continue, although they are slogging forward so far. All that have come up for confirmation here, votes have passed and have been confirmed. There has been some pushback on the Department of Government Efficiency. So their head, Elon Musk, and President Trump held a press conference yesterday where they defended their actions uncovering fraud, waste, and abuse for those that were intensifying their criticism of their efforts. There's been considerable pushback there. Amidst that, President Trump has suggested that we might want to get rid of the penny. So President Lincoln's on the penny, he's on the $5 bill. The way I look at it, there's not much of a loss, since after 110 years of mismanagement, the $5 note is probably worth about 5 to 10 pennies anyway, so let's just get rid of the copper. Talk of potential inflation dominates all the economic headlines here, whether it be the talks of tariffs or the CPI, the Consumer Price Index, which is due out later today. People will be watching both closely to see what the Fed might do at their next interest rate policy meeting. Let's go ahead and take a look at the impact of all of this on precious metals prices. Gold this past week is up 0.6%. It's trading at $2,881.30 this morning. It was $2,865.30 last week. Silver is down 1.6%, trading at $31.77. It was $32.30 this time last week. Platinum is up 0.6%, like gold. It's trading at $990 an ounce, $6 better than the $984 mark of last week. And palladium is down 3.3%, trading at $992. Last week it was $1,026 an ounce. With gold outperforming silver, you can imagine it takes more ounces of silver to buy that ounce of gold. So your gold-silver ratio is at 90.69. It was 88.71 last week, and the dollar is holding firm. It's at 107.88 on the index today. It was 107.51. It's been 107 and change for the past few weeks. So the GSR is elevated. The gold-silver ratio is elevated again. And I want to cover a question from a longtime client and good friend, Senator Bulworth. He says, Rich Checkan always references the gold-silver ratio. Why is it significant? What use is this ratio to someone considering purchasing or selling either gold or silver? Are there other historic ratios that should be watched, either by someone considering a first-time purchase or someone with significant precious metals holdings? And what about the gold to the S&P 500 or NASDAQ ratio, gold to a barrel of oil, silver to a pair of Bruno Maglis, to a pair of shoes? That last one is a very interesting ratio. I'm not sure anybody's tracking that, Senator Bulworth, but the gold-silver ratio is important because it does give us some indications as to the behavior of gold and silver. When the gold-silver ratio is high, like it is right now, unprecedentedly high at 90 to 1, 90 ounces of silver to buy 1 ounce of gold, it suggests that we are at the bottom or near the bottom of the gold and silver prices in the end of a bear market, the start of a bull market in gold and silver prices. As gold moves up, silver will follow, but lagging behind, and it will eventually outpace gold to the upside. So what you have is, as the prices of both metals increase, but silver goes up faster, you're going to see that ratio come down. And traditionally, as we work our way through a bull market and come to the end of it, that gold-silver ratio gets down to about 35 to 50 to 1. All right, so that's a big change from 90 to 1 to about 35 or 50 to 1. And that signifies we're at the peak of gold and silver prices. So you can trade that a few different ways. If you're just looking to buy gold and silver when the ratio is high, they're both cheap. Your insurance premium for gold is cheap, and your potential for profit for silver is at its best levels ever. As it goes to the bottom end of the spectrum, then you're saying, okay, well, this is not the right time to be buying for profit. Of course, you always buy for insurance and have that covered regardless of the price of gold or silver. And then a lot of people will trade. So right now you're getting more ounces of silver at that peak, that 90 to 1, than you are for an ounce of gold. So people will trade their gold for silver here, ride that ratio down, and then when it gets down to 35 to 50 to 1, they'll go ahead and sell their silver and trade it in for gold, get more ounces of gold for the same number of ounces of silver. So there's a lot of different ways to use that. I don't know how to work shoes into that, sorry. But the bottom line is the GSR has been watched for years. It is a pretty good indicator of where things are in the gold-silver market, whether it's bull or bear. And right now we are screaming bear, turning to bull. It is a great time to acquire both gold and silver here. We'll talk more about this tomorrow. Our Always Something Interesting alert is going to cover the gold-silver ratio and give you an update, so look for that. As always, we want you to go ahead and follow us. Sign up on our YouTube channel, follow us, like us, send us your comments and questions like Senator Bulworth did. Go ahead and follow us on social media. Take our twice weekly Always Something Interesting alerts and our once monthly information line newsletter. But don't ever forget that in the end, getting rich starts with keeping what's yours.